Good afternoon, and thanks for joining us today. I'm Bruce Tatters, CEO at Red Cloud Securities. Today's webinar features Seabridge Gold, the premier gold and copper exploration story in the world today, with all of its projects in politically secure regions of Canada and the US. Seabridge ranks number one in gold reserves per share and number one in gold resources per share among all North American listed gold companies. I would also suggest that many people forget the really large endowment of copper resources that Seabridge also boasts at its main project. I'm sure Rudy's going to get into that today. We're extremely privileged to have Seabridge here to provide a general outlook for 2023, and I'm fairly certain a nice, robust update on Iskut, given the most recent press release from the company a couple of days ago. So today I have Rudy Franck, co-founder, chairman, and CEO, who will be providing the update. After the formal presentation, there will be a question and answer section of the webinar. We will take questions live at any time via our chat function, and please get them in as quickly as you can, and we'll do our best to prioritize and get to as many questions as we possibly can. To start, we'll handle the disclosures and then get right into it. For Seabridge, there will be many forward-looking statements made on this. I would direct listeners to the cautionary note on page 2 of Rudy's corporate presentation. For Red Cloud, I would highlight that this webinar is for information purposes only and should not be considered a solicitation to purchase or sell securities or a direct recommendation. We would note the call doesn't take into consideration the particular situation of any individual investor. Participants should rely on their own investigations and seek their own professional advice before investments. Please see our most recent research located on our website for Seabridge Gold specific disclosures as well. So now I'm going to turn it over to Rudy to begin.
Thank you, Bruce. And first and foremost, a Happy New Year to everyone. It sure looks like we're at the starting segments of a nice move in gold and hopefully soon gold equities. And secondly, thank you for taking some time out today to listen to the Seabridge update. As Bruce mentioned, I will be making forward-looking statements. Also, we added a new slide to our presentation, incorporating all the technical disclosure in terms of 43101, in terms of the leading consultants that we have that have put together all of our technical numbers, reserve resources, and PFSs and PEAs. So as Bruce mentioned, we're focused exclusively on North America. All of our assets are either in Canada or the United States. This is by design. In my career, I've had mines expropriated around the world. Political risk is real. If you don't believe it, just look what First Quantum is now going through down in Panama. Our 2 advanced stage projects are KSM and Courageous Lake, and our 3 earlier stage exploration projects are Iskut, 3 Aces and Snowstorm, and I'll touch briefly on each of them today. When my colleagues and I formed the company in October of 1999, our goal was to create the industry's best leverage play to a rising gold price. And we followed the simple concept of trying to grow our ounces in the ground faster than shares outstanding, with the thought being that the more ounces you can provide on a per share basis, the better your share price should do as the gold price goes higher. And as you can see from this chart here, we've delivered on that. Our ounce count has grown over 1,000%, about 1,000% since 2003, while our share count is only up about under 200%. And what this means, if you look at Seabridge relative to the industry, former gold reserves per common share, or if you want to look at it in terms of gold resources per common share, we have 5 to 50 times more gold ownership per share than any of the leading companies in our space. And what this has translated into is what we were hoping for, that in a rising gold price environment, our share price outperforms the price of gold. And as you can see here, we're one of few companies actually that delivered that optionality and leverage to the gold price over the long term. I always find it interesting to note that if you look at the better names in the space here, the Barricks, the Newmonts, the Agnico Eagles, they've all underperformed the price of gold over the past 20 some odd years. You would have been better off owning physical gold and eliminating political risk and operational risk than owning any one of these equities. Not the case with Seabridge. The takeaway from this, if we are now in the beginning of our next big move up in gold, which we believe we are, Seabridge shares should do what they've done in the past, and that's provide significant outperformance and leverage to our shareholders as the gold price goes higher. And as Bruce also mentioned, we're not about gold. Fortunately, along the way, we also found a lot of copper. In fact, if you look at us in terms of copper reserves per share or copper resources per share, we provide a lot more copper per share than the leading copper companies. And why is this important? As bullish as we are on gold going forward from this point, we believe actually copper can actually have a major run. The amount of copper that's going to be required to satisfy green energy initiatives is overwhelming. The fact is our industry will not be able to provide that, and as a result of that, the price of copper will go through the roof. I'm going to focus most of the presentation on KSM, which is our core asset, the asset that's leading to most of our value in the marketplace, an asset we acquired from Placer Dome in June of 2000. It's in a region called the Golden Triangle that's fast becoming one of the go-to spots by the leading gold companies and copper companies. In our region, we now have ourselves, we have Newcrest, we have Teck, we have Newmont. We bought this project from Placer Dome when there was only 2 small deposits known on it. If you fast forward to today, we've now spent over $600 million at KSM, not only through exploration and growing the reserves and resources, but also by taking this project successfully through the environmental assessment process. This is one of the few big projects in the world that actually is shovel-ready. In fact, we've started early site construction activities there to ensure that our permits remain valid for the life of the project. Infrastructure is very important for big projects: roads, power, and ports. We're fortunate that we don't need to build any of these. In fact, they're all there supplied with other people's money. Highway 37, a major highway just to the east of KSM. Along that highway, the government of Canada and British Columbia has spent over $700 million extending the power grid, bringing cheap hydropower to the region. We've now secured with BC Hydro 250 megawatts of power from this line that will furnish KSM. In fact, we also signed a facilities agreement with them a little over a year ago, where they're now building the substation off this line, so we'll be able to connect to that line from KSM. Also to the south of us in the town of Stewart, we had one old port there that's been there for a while. That was rehabilitated when Newcrest came into the scene. There's now been a brand new port built that's waiting for an anchor tenant. I can't tell you how important it is to have this infrastructure in place that probably eliminates at least $1 billion to $2 billion of capital that we will not have to spend versus other companies that have these large projects that need to spend to bring power, ports, and roads into the region. KSM, we call it a project, but to be honest, it's a district. When we bought this project from Placer Dome, the sulfurettes and the Kerr deposits were known. They delineated a resource of about 3 million ounces of gold and 2 billion pounds of copper. We discovered Mitchell in 2007. We discovered Iron Cap in 2010. In 2012, we did a pre-feasibility study with these 4 deposits to get our permits, which were approved in 2014. And in 2020, we acquired a 5th deposit called East Mitchell from our next door neighbor, who was Pretium at the time and is now Newcrest. We now have 5 deposits here, 2 of which can be mined as large tonnage underground block caves with emphasis on copper, Iron Cap, and Kerr, and 3 of the deposits can be mined as large open pits, Mitchell, East Mitchell, and sulfurettes that are more of a gold focus. Collectively, these 5 deposits give us over 150 million ounces of gold, over 50 billion pounds of copper, over 800 million ounces of silver, and over 1 billion pounds of molybdenum. We did the 2012 study to get our permits. We updated that study in 2016 to take into account changes in metal markets, changes in agreements we made during the environmental assessment process with the regulators and the First Nations. And just last year, we updated the study once again to incorporate Snowfield, which we're now calling East Mitchell, that we purchased from Pretium, into the mine plan. The big changes from the 2016 study to the 2022 study: first and foremost, we eliminated any block cave mining. We now can show 33 years of open pit only, capturing over 47 million ounces of gold and over 7 billion pounds of copper in proven probable gold reserves. We can show a project that has an all-in cost of production of under $700 an ounce. And that includes the upfront capital, the sustaining capital, the closure costs, and the reclamation costs, and the operating costs net of copper and silver credits. We can show a project here that has a payback period in less than 4 years on a project on this mine plan that goes for 33 years. And as good as that mine plan is, we also showed within that same study, going after the higher grade copper deposits at Iron Cap and Kerr, adding another 39 years of mine life, another $5 billion plus in net present value to the project beyond the 33 years. So when you look at KSM today, between the PFS and the PEA, 72 years of mine life, capturing a lot of gold and a lot of copper with still a lot of metal in the ground. I point out that if you look at this combined mine plan, PFS and PEA, we're only capturing about 4 billion tons of the 11 billion tons of economic resources we have there. So we can talk about a 72-year mine plan, but in reality, it's going to go longer than that. And I think that's one of the reasons why we have the support we do from the indigenous people in and around the project. When populations around mines look at opportunities, most mines only last for 10 to 15 years, then the mine gets shut down and all the economic benefits go away. We can show a project here that's going to be multi-generational. People working on the project today, their kids, their grandkids, their great-grandkids, and even beyond that will have access and opportunities at KSM. We received our permits in July of 2014. Initially, those permits were good for 2 years before you needed to reinitiate the environmental assessment process. In 2020, we reached out to the regulators asking for an extension because of COVID. The regulators did give us an extension, so the permits are now set to expire in July of 2026. And this was always a challenge in talking with potential joint venture partners to co-develop this asset, having the permits potentially expiring by a certain date. Fortunately for us in British Columbia, there's a mechanism known as substantially started, that if we can achieve that designation, our permits that we now have are good for the life of the project. So in 2021, we decided as a company, let's go do that ourselves. Let's not wait for a partner to come in, and let's remove that risk from our joint venture discussions. We started that in 2021. In 2022, we did a financing using the silver in the ground at KSM to fund substantially started activities, raising US $225 million from Sprott and Ontario Teachers Pension Plan, and we put those dollars to work. Here you can see in this photo here, we built a major camp right out the doorsteps of KSM, right off Highway 37. This camp now is fully functional with over 100 beds available. Another big part of the substantially started is actually tying into the power grid that's now up and energized. We signed the facilities agreement with BC Hydro. We started that process last year where they're actually building the switching station, and that work will continue this year to complete that station. We're building roads. We have road access along Highway 37, but then no road access into the mine area. So a big part of gaining control of the asset is actually having access through road construction. Last year, we finished 17 kilometers of roads along the Treaty Creek and also started the road access along Coulter Creek. That access will continue this year, where we expect to extend the Treaty Creek Road up to where the tailings facility and the mill will be located. We also, as part of our environmental assessment, when you destroy fish habitat in Canada, you need to offset that with more ground than you're destroying. So one of our showcases here is actually building our first fish habitat offsetting location right off of Highway 37, and we expect to have that fish habitat done later this year. We also had a major bridge crossing along the Belle Irving River. You can see here we actually had to build a temporary bridge in the foreground. You can see that's being taken down once the new bridge was done. So we now have a bridge access to cross this river that'll be there for the life of the mine. Our second big asset is Courageous Lake, located in the Northwest Territories, an asset we acquired from Newmont and Total Energy in 2002. It's located just south of the two big diamond mines, Diavik and Ikati. We have over 11 million ounces of resources here. We did a pre-feasibility study at Courageous Lake in 2012 that at the time, because of a strong Canadian dollar relative to the US dollar and a gold price much lower than it is today, it did not show very robust economics. And then as we were advancing KSM, we kind of mothballed this project for a number of years. What I'd like to point out, though, is at one point in time, Courageous Lake generated a market cap to us of over $500 million before we did any work at KSM. If you look at the project and just change the gold price and the exchange rate, the project looks very different. We've now decided to move forward on this project. We're actually going to update the pre-feasibility study. We're going to start with a smaller mine plan than we previously had, higher grade as well as a result of the smaller mine plan. And we expect to have a new pre-feasibility study done on Courageous Lake by the end of this year. Exploration is what really made this company. Our exploration team over the past 15 plus years has found more gold through the drill bit than any company on the planet, and that includes all of the majors. In 2015, when the price of gold dropped again, we took advantage of a down market and went out and looked to what we could acquire next. Our goal is always to buy projects at the bottom of the market, then create value through additional work. One of the acquisitions we did was a project called Iskut, which is located about 30 kilometers from KSM in a straight line. It's a large land package. We bought Iskut with the belief that it had the potential to be another KSM. Same age of mineralization, same rocks, a lot of the same characteristics. In fact, when we bought this project, what was already known was the Bronson Slope deposit that has a little over 2 million ounces of gold and about 500 million pounds of copper. We've spent the last few years now looking at what are the opportunities at Iskut, and we're now vectoring and focusing in on what we believe are large gold copper porphyries. In fact, this past year, we drilled underneath the Bronson Slope deposit, hit a very large breccia pipe, over 300 meters in diameter. And within that pipe, we're seeing a number of eruptions of metal that's coming probably from a source below that. In fact, this one hole 5 returned 174 meters, pretty much right from the surface at 0.86 gold and 0.34% copper. And why is that important? Well, that intercept is higher than the gold grades we have in reserves at KSM. We're going to be doing another meaningful program at Iskut during this coming year. We're fully funded for that. We're going to be expanding Bronson Slope by drilling the breccia pipe underneath Bronson Slope. And we're also going to be looking for the source of that breccia pipe or the mineralization of that breccia pipe underneath that. There's 100% certainty that there is a gold copper porphyry underneath the pipe. We just need to find it. And then in addition to that, based on geophysics we've done, we also have a number of other targets on trend with Bronson Slope going up to the Johnny Mountain mine, which we'll be drill testing this year as well. So stay tuned. We believe that the 2023 drill program will finally unlock new resources defined by expanding Bronson Slopes as we continue to look for new opportunities. Second acquisition we did was in Nevada, a project called Snowstorm that we acquired from John Paulson, a project that sits right on the intersection of the 3 most prolific gold belts in Nevada, the Carlin Trend, the Getchell Trend, and the Northern Nevada Rift Trend. It's a large land package. We've now been doing a number of years of drilling, hopefully vectoring into Twin Creeks, Turquoise Ridge style mineralization. We have another program planned for 2023. Obviously, finding something here right next to 2 of the biggest mines within the Newmont Barrick Nevada joint venture would be substantial. So we will continue activities at Snowstorm in 2023. The most recent acquisition we did was 3 Aces in the Yukon, a project we acquired from Golden Predator right at the height of COVID. They needed some liquidity. We've been following this project for a number of years. At one point, this project generated a market cap in excess of $200 million to Golden Predator. And in 2020, when COVID hit, we were able to step in and buy this project for less than $10 million. It's a large land package. Again, it's a district play. It took us a couple of years to actually get our Class 4 permit. We had spent a lot of time with First Nations in the Yukon, as well as the regulators. We finally received our permit, our Class 4 permit, in September of last year, and then immediately went out and did a small drill program. Our permit requires that we complete drilling by the end of October. So we got in and had 4 holes done, and over the next week or 2, we'll be announcing the results of this drill program. If you look at this project from a historic basis, there was a lot of very high-grade intercepts along the strike of the mineralization here, very close to surface. We think this is a big system. We think it has 5 to 10 million ounce potential, and we will get added in a big way in 2023. So before I open it up to questions, just kind of tying everything together on why I have 95% of my family's net worth in Seabridge common shares. Well, first and foremost, I believe that the price of gold is going to go substantially higher. I believe over the course of this year, we're not only going to take out the all-time highs of $2,100 in gold, but go to perhaps numbers well above that. And if gold does what I think it's going to do, our shares should do what they've done in the past, and that's outperform gold and gold equities in a big way. And don't forget the copper. We also are sitting today with 100% ownership of the largest undeveloped gold copper project in the world, in a world that the gold majors need new projects. They're running out of reserves. Their mine lives are less than 15 years now from existing reserves. If they want to sustain themselves, they need new projects. Here's one in a safe jurisdiction that's gone through the environmental assessment process that shows tremendous capital efficiency. The copper companies, on the other hand, they need new copper projects to satisfy the demand that's growing in the copper market. From the physical side, new mines need to be built, and here's one ready. Exploration, we built our company on the success of drilling. We now have 3 earlier stage projects, and now that COVID is fully behind us and permits are in hand, we're actually going to get back to what we do best, and that's drilling. There's no question that East Mitchell into the KSM mine plan not only significantly improved the project's economics, but more importantly, it made the project more executable for companies that don't have block caving experience. All of our previous mine plans incorporated block cave mines in addition to open pit mines or deposits within the first 10 years of mine life. By bringing East Mitchell in, we can push the block caves 30 plus years into the future. However, those companies that want to bring the block caves forward have that optionality. Our goal at KSM remains to get a joint venture done with a major mining company whereby we minimize our capital exposure to the project but maintain a meaningful interest. I can tell you that at this point in time, we have more interest being shown in this project than we have in the past. And it's a combination of the bigger gold companies and the bigger copper companies. And then I'll close, I think what I'm most proud about, having been the CEO of this company for over 24 years now, is after 24 years building this asset base, we only have 81 million shares outstanding. If you look at our industry, I think we're horrific executors on capital efficiency. Share counts in companies go through the roof very dramatically and very quickly without offsetting that dilution with the real value. And that's not just the junior companies, it's also the senior companies. Our goal, our message to shareholders is we will continue to look for opportunities to grow ounces per share, minimize equity dilution, but add value along the way. So Bruce, that's my presentation. Happy to answer questions.
Thanks, Rudy, very much. I have a couple of specific questions that's already set on the line right now. So I'll go to those, and then I'll obviously chime in when I get a chance myself. One of the first ones was, what were the I'm assuming this is relating to KSM. What were the changes you made with the First Nations in 2016?
Well, the First Nations were involved dramatically through the entire environmental assessment process. So we filed our EA documents in 2014. They were engaged at the time. They were involved in the design. They gave us feedback on that. Subsequent to that, after we got the project approval with the support of all the First Nations in the region, we actually entered into an impact benefit agreements, first with the Niska Nation, and then more recently with the Tahltan Nation. As we now execute on substantially started activities, they are seeing the benefits of those impact benefit agreements. Last year, I think at KSM on substantially started, we spent over $150 million Canadian. Most of those dollars were actually paid towards First Nation companies that actually have had the expertise, or companies that have an affiliation with First Nations. So it's not just having an agreement in place, it's actually showing how that agreement works as dollars are spent going forward. I will say that I believe that we are the poster child, and a number of the leaders of the First Nations have stepped up and pointing the finger at Seabridge as this is how companies should do business with First Nations.
Rudy, the next question I have on the screen here is, The key to unlocking value is a joint venture partner for KSM. Without violating disclosure, what assurances can you give regarding a JV deal will actually get done? And what are the obstacles in your mind preventing that deal from happening?
Well, I will give you 100% confidence that a joint venture deal will get done. The question is timing.
When?
It's all about terms more than timing. As I said, we now have more interest being shown than ever. I think the market environment now is better than it's ever been, with gold prices rising, with copper prices rising, with new projects being needed, with the major gold companies running out of reserves. Um, I remain confident that a deal will happen. My goal is to get a deal done this year. I think it's the time to do it. I think we've put our best foot forward here now. I can tell you that by us taking on substantially started on our own and funding that ourselves, that has been a game changer with a number of the parties that have been looking at this project for some time. In the past, in our joint venture discussions, we were asking that as part of the earn-in to the project, that they also funded substantially started activities, which is challenging for a company before they've actually made a construction decision. By us removing that now from the table and taking it on ourselves, it makes the deal a lot easier to do from the partnership side because they can focus on doing the work necessary to get to a construction decision within an agreed period of time while we focus on substantially started and remove that risk. The other point is once they're ready to start construction, having access to the site already with roads, with bridges, makes a big difference to execute on building the greater project at KSM.
So Rudy, one of the things you mentioned briefly when we're discussing KSM, but I'd like to elaborate on it a little bit. One of the moves, including East Mitchell and the acquisition that you made in 2020, was to drive near-term economics and project returns higher. It also made it a little bit more goldy in the near term in the deposit, pushing the copper porphyries and the block caves out into the future. So the question is, has that changed the nature of the JV discussions? And do you think that can preclude the big base metal companies who obviously have more block caving experience than the typical gold companies in discussions?
Great question, Bruce. In terms of the gold company side, it's probably made the project more attractive. More gold reserves is a positive. As a result of eliminating the block caves, at least in the pre-feasibility study, we actually were able to increase throughput from 130,000 tons a day to 195,000 tons a day. That shortened the mine life, and we now can show a project open pit only 33 years, averaging over 1 million ounces of gold production a year and nearly 200 million pounds of copper. Clearly, by reducing the copper component, makes it a little less of interest to the copper companies. However, we've done our own internal studies that we're sharing with the big copper companies that are under CA to show that that copper optionality is definitely there and can be brought forward in the mine plan if you want to execute on large underground block caves. So, one of the unique things about KSM that you don't see in most projects, with 5 deposits, with varying degrees of gold and copper in each, you have a lot of flexibility in how you might want to tackle this. Anyone that looks at KSM, there's no question that for the first 8 to 10 years of mine life, you're going to focus on Mitchell and East Mitchell because that's where you get your best bang for the buck in terms of recoupment of capital, payback, and internal rates of returns. But beyond that, you have this flexibility where if you want to go after copper, because you're a copper-focused company, you can do that. If you want to stay on track for gold, you can do that as well. I think what we can show now actually makes this project attractive to every company out there on the big scale. Those that have block caving experience, those that don't, those that want to focus on gold, and those that want to focus on copper.
I would mention as well that in the more recent presentations for some of the largest gold companies out there, they particularly Barrick, they have talked about an affinity for having some copper production exposure alongside their gold, and they see that as quite valuable.
No question about that. And we're seeing that in our dialogue with the big gold companies as well.
Um, so Rudy, one of the questions is when's the anticipated completion of substantial start when it triggers that BC thing, and how far does that take you along, and when do you see that?
Yeah, great question. So we have until July of 2026 to get that recognition or that designation. We're not going to wait that long. We did a lot of work last year. We have programs in front of us this year to spend a similar amount of money, or maybe even more than we spent last year, um, to get to that point. We are hoping to be in a position, obviously with the support of the First Nations and the understanding of the regulators of what we're doing, to be in a position to perhaps file for substantially started designation in early to mid 2024, and then having that designation in place by the end of 2024. Removing that risk from any joint venture discussion is a major, major plus, and we want to fast track that, not wait just to the end, but get it done sooner than later.
Another First Nations question. TSK-LH Nation is a stakeholder with KSM falling in their territory. What steps are being made to work with them?
Yeah,
That's very
we've had
specific.
we've had ongoing. It's called the Skikamaha. I know it's hard to pronounce. We've had positive discussions with them. There are ongoing discussions right now. We recognize that they are one of the 5 groups we were told to deal with within the region, and we're dealing with them. We'd like to give them some opportunities here at the project, and we're discussing those with them.
Another question, and this is more of I think, a global Seabridge type of question. Would you ever consider less politically friendly jurisdictions for future projects? And if yes, what characteristics would you draw to new locations? I think I know the answer to this, but
Not a chance, Bruce. As you know, in my career, I got mines expropriated that I built. I look around the world today. I scratch my head on some of the decisions that are now being made by big mining companies, some of the jurisdictions they're going into. That it's not just a matter of political risk; it's also risk associated with the safety of your people. Um, I will stay focused on North America. We have a great set of assets there. We continually look for new opportunities, but we will not go beyond Canada or the United States.
do you anticipate, here's a question off KSM because we talk a lot about KSM. Do you anticipate any of your other projects, potentially your Nunavut project, might fall under this category of getting them far enough advanced where you'd start having discussions on partners for them? Or would you consider taking them into production yourself?
We will never build a mine ourselves. We've been very clear on that from day one. Our goal is to either take a project to a point where if we can't drive any additional value to our shareholders, we'll sell it. We've sold a number of non-core assets over the past 2 decades, I think receiving well in excess of $70 million in cash proceeds from selling non-core assets. I never fall in love with any one project. If the best deal to drive value is a sale, so be it. If the best deal is to do a joint venture, so be it. And we will look at all of our projects when the time is right at what is the best way to unlock value to our shareholders moving forward.
Another global question. I think, again, I think I know the answer to this, but I think it's very good for the viewers. Um, I've got to think with a lot of the senior gold companies in particular, but other senior mining companies having reserve challenges, if they came knocking at Seabridge corporate rather than at the JV level, what would the answer from the company? I do realize you got a lot of insider ownership, but what if they come and say, we'd rather just take all of you rather than JV with you on a project?
Well, look, that would be a high class problem to have. I wouldn't call it a problem. It just is more recognition for what we have. At the end of the day, Bruce, it's up to our shareholders to make that decision. If an offer comes in that we think is of merit, we'll take it to our shareholders, and they will make the decision. I can tell you myself personally, I did not spend 24 years of my life building this company, building this asset base to take our company today and sell it even at a market premium to today's share price to get a deal done. When I look at our asset base, and let's make the math simple, we have 2 ounces of gold in the ground per common share. Right now, we're trading at about $14 US per share, which means our ounces in the ground are trading at about $7 per ounce. KSM, as we've shown in the pre-feasibility study, has a profit margin today, at least on the reserves, of over $1,000 an ounce. If we got just $50 an ounce in the ground value for the ounces we have, that's a $100 share price. So I'm not looking to sell my shares in Seabridge today at today's $14 share price, plus even a 30 or 40% market premium. I believe, as do most of our big shareholders that are on side with this, and they've been with us a long time, that the value we will obtain through a joint venture is significantly higher than the value we have right now owning 100% of the asset, or that we could get in looking to sell the company.
So on the main, like one of the things that seems to be very clear is that a deal on your main asset, some type of joint venture structure on your main asset, would probably crystallize a tremendous amount of value across your projects because it would show the ability to get one of these deals done. There's been periods of time when you've been close to deals and haven't got it across the finish line. So do we think we're in a commodity environment and a situation with these companies today where we think we can get it across the line?
I believe so. I look at the copper price, the gold price. I am very positive on both of those. And then on top of that, if you look at, you also need a strong M&A environment. And we're now starting to see Pac-Man again, where the big companies are gobbling up intermediate companies or companies of the same size. That tends to be the time when deals get done, all kinds of deals. I point to Agnico Eagle and Pan American Silver's recent acquisition of Yamana. There's a lot of activity going on the M&A side because the companies need to build their reserves, and so I think this is a great time for us to get a deal done. As I say again and again, terms trump timing. We're not going to do a deal just for the sake of announcing a deal. It's got to be the right deal that generates the right kind of value upside to our shareholders.
Well, and with those most recent deals, we've ended up with fewer but larger senior gold players, and one would think that to move the needle for either them or these $100 billion global base metal companies, one would need a fairly substantial project in order to move the needle properly for them.
Yeah, absolutely. Let's just look at Agnico Eagle as an example. Not to say that they're engaged with us or not in any discussions, but several years ago, it was clear that KSM was probably too large for them to take on their own. They then do the acquisition to buy Kirkland Lake. They then do this new deal. They now have to replace over 3 million ounces of production a year. That's a big nut to fill every year. But they're also at a point where, from a capital perspective, they can do bigger size deals. So, Agnico Eagle, who may have been too small years ago, is now of sufficient size that could possibly look at KSM. Again, I'm not saying that they are or they aren't.
No, but just that they're more players of the bigger scale, right?
Agreed.
And their technical team, right, at a much bigger firm would probably be that much deeper to handle any technical issues or merits or wrinkles that might come up.
And then the other side of the coin, Bruce, is the scarcity of these big opportunities.
I think that's the biggest thing.
There's very few big projects out there of scale that actually can be meaningful to the bigger companies. You have a company like Barrick going to Pakistan. Yeah, great project, but God, look where it sits on a map relative.
I thought Dominican was edgy, Rudy.
Well, I thought I as you know, Bruce, in my prior life, I did build a mine in Panama. It did operate for a few years and then got shut down when the gold price cratered in 1999. But Panama was pretty safe back then. Now, what First Quantum is going through there, it's unbelievable. The concessions they're going to have to make just to preserve their $10 billion of investment into that mine. That's why I like Canada and the United States. Expropriation tends not to happen in these jurisdictions. Yeah, we can say higher tax rates, but it's still the best place to operate, in my view, compared to where some of these other companies are now focusing on more risky opportunities, I'll call them.
One other question here. Will a JV partner commit before substantially started designation is complete, in your mind?
Yeah, that's a great question. Likely not, but that's not what we're asking. So we're asking for a partner first to come in and do the necessary work, i.e. complete a bankable feasibility study to get to a construction decision. By the time they complete that bankable feasibility study, we expect to have substantially started behind us, so it'll be clear to go ahead. At the point of completing a bankable feasibility study, they'll then have another agreed period of time to make that construction decision. So you're not committing them to the construction today, and we're doing the substantially start on our own and funding that 100%. So when you look at it from a partner's perspective coming in, I think it's a pretty good deal. You're not committing to spend the $6 billion today. You're doing the work necessary to get to that decision. You've got time to get it done. In the meantime, Seabridge is doing the work unsubstantially started. And then at a point of construction decision, that's what happens. We already know that probably 50% of the project's capital at that point in time can be funded through a project facility. So if you look at the balance to be spent there, it's a much smaller number, and that balance is spent over 4 or 5 years. So we're not looking at you don't need to go out and have $6 billion in the bank. It's done over time, and it's probably cut in half at least with the project facility. In fact, one of our asks in joint venture discussions is that our joint venture partner at a construction decision would go out and secure at least 50% of the project's capital through some sort of project facility.
And with the scale of them, that shouldn't be that big of an ask.
And when you look, you look at the cash flows over the first 10 years of mine life. I mean, this project over the first 10 years of mine life averages over $2 billion of cash flow a year at today's metal prices. So the ability to pay back a project facility, this project is very financeable. Safe jurisdiction, permits in hand. We'll have a world-class operator in place at the time. And it's got a mine life in excess of 70 years that only captures about 40% of the mineral inventory there.
And great infrastructure. That's the thing that always gets me with that slide. It's how well situated you are versus when you started there for infrastructure.
Look, we got lucky when we bought this project from Placer Dome. There was nothing there. That road was not there, paved the way it is.
Middle of nowhere.
There were no ports. And that's why Placer Dome got out of there. Logistically, it was a nightmare to try and get work done there. Now you have everybody there. Our next door neighbor, you sit on top of the Kerr deposit, look across to the next hilltop, and that's Pretium, or now Newcrest with the Brucejack project. You go up the road from Highway 37, that's Newcrest with Red Chris mine.
Red Chris, yeah.
North of us again, you have Galore Creek. That's a joint venture between Newmont and Teck. Last year, Newmont went in and bought GT Gold, a project that's tiny compared to KSM and needs a lot more work done and much lower grades. So yeah, I again, when you ask me, 100% certainty that a deal will get done. The question is when and with who.
Terrific, Rudy. I think that's most of the questions for today. We really appreciate you updating a lot of our followers at Red Cloud, and appreciate you having taken the time to do this.
Well, Bruce, again, thanks again for making this all happen. You and I have known each other for a long, long time.
Too long, we don't want to say.
And I appreciate having you in my corner. And for those that would like to learn more, don't hesitate to reach out to me. My email address is Rudy, R-U-D-I, @seabridgegold.com. And if you send me an email with a question, please include your phone number. I'd much rather call you back and give the answer to you live versus in an email response. So thanks again, and look forward to our next meeting, Bruce.
And I can verify that Rudy's exceptionally good at getting back to people.
Thanks. That's my job.
Thanks, guys. Thanks everyone.